Hello, this is Daniela Cambone and you are watching Kitco News. My guest today is Gero of RBC Wealth Management. George, nice to see you again. And I want to jump right into it and ask you about today's top story, which is the EU summit and the impact it may have on the precious metals landscape.
While a lot of people believe that the EU possible solution to Greece and Portugal is one minor help to boost the economies of at least Western Europe, I think it's somewhat inflationary, because what it means is you're going to see stimulus on two continents eventually. We're talking about continued stimulus in the United States, and this means that there could be stimulus in Western Europe, all of which would be helpful to the recovery on two continents for the various economies.
Which might not translate into good news for gold then, George.
Which might not translate into good news for gold in the short term, because people will feel that a major weight has been lifted from everyone's shoulders. On the other hand, in a longer outlook, it is somewhat inflationary, and that is, of course, already shown by $100 crude that seems to be trading in September and December contracts.
All right, George, so do you think that we might see some of these European countries selling off some of their gold to offset the debt?
I'm not sure that anybody would be selling gold. People have been selling gold. Central banks were selling gold every September. There was the agreement to sell 500 tons of gold by the ECB members. And last year, not everyone took advantage of being able to sell their gold. And in fact, you've seen central banks buy gold to boost their currencies. So I don't think that the political will is there for central banks to sell gold, but you might see gold loans, and you might see gold put up as collateral for loans.
Okay, George, so from what I'm sensing, are you saying we should expect more volatility, so just hanging on tight?
I'm looking for much more volatility as soon as the week of July 27th, when 25,000, in round numbers, options are due to be exercised with a $1,600 strike in August gold on COMEX. And that could have very interesting implications coming at a most inopportune time, because August 2nd is the target date for the debt ceiling talks, and because July 28th is when the options, if they're in the money, become futures contracts, which means that weekend will be, Monday will be August 1st notice day. People have to either put up full margin or make or take delivery of futures contracts, and if they have excess positions, instead of putting up cash, they may be likely to sell those futures contracts. But if gold is very much in the money, over 1,600, they will take the gold and roll it into the December futures.
All right, thanks so much for your insights today, George.
Thank you. I hope that kind of tells you to fasten your seatbelt.
All right, we will be fastening those seatbelts, George. Thank you for joining me, and thank you for watching Kitco News. You can email me your comments and questions at newsfeedback@kitco.com.